Hello everyone, welcome to Sophia Money. Today we'll be talking about George Soros and his famous broke the bank trade. Soros is a Hungarian-born American billionaire and philanthropist, who is well known for his work as an investor, currency trader, and political activist. Throughout his career, Soros has made some of the most successful and controversial trades in history, including the one that famously broke the Bank of England. But who is George Soros, and how did he become one of the most successful investors in history? Let's take a closer look. If you want to redeem a free ebook, The Alchemy of Finance, please watch until the end. Early life. George Soros was born in Budapest, Hungary, in 1930. His parents were non-practicing Jews, and his father changed the family's name from Schwartz to Soros to help them avoid persecution during the rise of the Nazis. Soros experienced the horrors of World War II firsthand, including the Nazi occupation of Hungary and the deportation of his own family to concentration camps. These experiences would shape his worldview and influence his later philanthropic work. Soros eventually immigrated to England, where he attended the London School of Economics. He later moved to the United States and started his career in finance. The beginning of his career. In the 1960s, Soros began working for a series of Wall Street firms, including F.M. Meyer, Wertheim & Company, and Arnhold and Esblay-Schroeder. In 1969, he founded his own hedge fund, Soros Fund Management, which later became known as the Quantum Fund. The fund was known for its high-risk, high-reward approach to investing, which would later pay off in a big way. Soros's philosophy. Soros's investment philosophy is rooted in his belief in reflexivity. This idea suggests that investors should not only take into account the objective facts about a given investment, but also the subjective perceptions of other market participants. In other words, Soros believes that markets are not always efficient and rational, and that investors should take advantage of this by looking for discrepancies between the objective value of an investment and the subjective perceptions of other investors. One of Soros's most famous quotes sums up his philosophy perfectly: "It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong." The Big Break. Soros's big break came in 1992 when he famously broke the Bank of England with a short sale of the pound sterling. The trade was motivated by Soros's belief that the pound was overvalued and would soon be forced to devalue against other currencies. Soros borrowed billions of pounds and sold them on the currency markets, driving down the price of the pound and forcing the British government to abandon its peg to the European exchange rate mechanism. The trade earned Soros more than $1 billion and cemented his reputation as one of the greatest currency traders of all time. However, it also made him a controversial figure, with some accusing him of manipulating the markets and others celebrating him as a genius. Top of form. But Soros didn't stop there. In the late 1990s, Soros set his sights on Asia. He noticed that many of the currencies in the region were overvalued, and that their economies were vulnerable to external shocks. So, he decided to place bets against these currencies, essentially betting that they would decline in value. The first country Soros targeted was Thailand. In 1997, the Thai government was forced to devalue its currency after it became clear that it could not defend it against speculators like Soros. The Thai baht lost more than half of its value, and the country was plunged into an economic crisis. Soros didn't stop with Thailand, though. He continued to bet against other Asian currencies, including the Malaysian ringgit and the Indonesian rupiah. These bets paid off handsomely, as both currencies lost value and the countries experienced economic turmoil. It's worth noting that Soros' actions were controversial. Some accused him of financial imperialism and of profiting off the suffering of ordinary people. Others defended him, saying that he was simply taking advantage of market inefficiencies. Regardless of your opinion of Soros, there's no denying that he had a major impact on the global financial system. His bets against the pound and against Asian currencies forced governments and central banks to rethink their policies and approaches to managing their economies. But Soros wasn't done yet. In 1997, he turned his attention to Hong Kong. The city had long been seen as a bastion of stability in the region, with a currency pegged to the US dollar and a highly developed financial system. Soros believed that Hong Kong's economy was overvalued and vulnerable to external shocks, so he began placing bets against the Hong Kong dollar. This caused panic among investors and led to a run on the currency, with people trying to exchange their Hong Kong dollars for US dollars. The Hong Kong government was forced to intervene to defend its currency, spending billions of dollars to prop up the Hong Kong dollar. In the end, Soros was unsuccessful in his bet against Hong Kong, but he came very close to breaking the city's currency peg. So, what can we learn from Soros' story? One lesson is that market inefficiencies can create opportunities for investors. Soros was able to make billions of dollars by identifying overvalued currencies and betting against them. Another lesson is that investors can have a major impact on the global financial system. Soros' bets against the pound and Asian currencies forced governments and central banks to rethink their policies and approaches to managing their economies. Finally, Soros' story shows us the power of speculation. Some may see Soros as a villain who profited off the suffering of others, while others see him as a hero who exposed market inefficiencies and helped to bring about positive change. If you get inspired by this video, please like and share on this video. Subscribe to our channel so you don't miss out on any of our important info. We offer a free investing course worth $8,999 for our subscribers. Please find below for more details. If you wish to explore any particular topic on money, finance, and investing, feel free to comment below. Thanks for watching. See you then.